What is up, guys? It is your favorite mortgage lender, Abdel Kouatmi with Got Mortgages, coming at us live as always. Want to go over, there's a lot going on recently when it comes to the market. All of a sudden now the market is kind of sort of turning with rates shifting a little bit, right? So we're going to kind of go over that. We're going to go over what is going on with interest rates. What are some of the factors that I start seeing that is slightly impacting us and making us go higher, right? So we did receive news earlier, the Wednesday we saw that mortgage rates are starting to slightly tick up. We're right now sitting anywhere on a 30-year fix based on a 6.76 rate. Again, in order for us to move to those lower recent trend levels of what we're looking to do, we were always basing off of economic data. Now, when we talk about economic data, the main things that we were always concentrating on was employment and inflation, right? Now, with that kind of no longer necessarily being a factor, the Fed came out. We had really friendly data come out for the last two readings of both October, November, and that came in really good. But now all of a sudden, we start getting employment data readings that are kind of showing the opposite. And that's just going to be the scarier part. The Fed now came out, with the last minutes that just got released and said that the Fed's treatments of rate and the rate momentum is going to be data dependent. And I think that's the scarier part because at one point, in their last meeting, they basically stated the exact, not opposite, but they said that they were kind of leaning away from the data and they felt like we were on that positive trend. So this is what's causing the market volatility extensively from what we've been kind of seeing and what we've been kind of used to, right? Now, again, there's no reason, as we always say, to doubt that the impact of the Fed with the minutes being released and the market is playing that major prevalent role within this, right? We also saw continuing jobless claims that came in pretty much lower than expected. Now, because it came in lower than expected with the jobless claims, we're starting to see a little bit of volatility with interest rates. Okay. So you want to make sure that we're going to see this uptick and downtick. Next week is going to be the employment data week. So we're going to start seeing a little bit of that impact and exactly what it is going to happen. Tomorrow is a massive big day when it comes to data. We're going to get the Bureau of Labor Statistics data report. And let me tell you, that data report has always kind of, you never know what you're going to get, right? At one point, we got the last 2 months, like I shared, right? October and November's data report of 2023 showed that unemployment was going down, less jobs were being, or I should say, unemployment was going up, less jobs were being created, which showed a crack in the market. Now, all of a sudden, you're like, wait, hold up, e-break. This last week, we didn't see that much of a data-dependent result. And then at the same time, this time tomorrow, we're going to start seeing if the Friday job is going to change the tone. Are we going for that higher for longer mentality that we kind of thought we were getting away with, right? We got the employment data report, and the employment data report that came in earlier when it came to ADP. So ADP is the payroll report that actually monitors in terms of direct private employment. And that showed that there was an increase of 164,000 jobs in the month of December. Okay. And the other thing we monitor also is how is annual pay going as well. And that also showed that it was increased by about 5.4% comparatively to last year. Is that necessarily on pace to where inflation is coming at? And that's going to be the topic of conversation. That's what we're really going to look forward to seeing, and seeing if that employment data report with wage growth and the employment data report when it comes to employment and unemployment, are they staying congruent? Are they staying simultaneous in terms of the growth? If they are not staying simultaneous in terms of the growth, then we need to keep an eye on that high frequency measure, right? Payroll employment provides a really good, strong understanding for us as to how the labor market is doing. The labor market will simultaneously translate into mortgages. It is just so critical that you work with the professionals who truly have an understanding. It's no longer all about, 1 + 1 is 2. We need to adopt competitive strategies, and we need to make sure that we have a firm understanding when we take a look at a rate risk with wage price spirals, when we take a look at pay growth and what exactly is going to impact page growth and wage growth with inflation. So, I want to jump on here real quick, just giving you guys an update. Tomorrow is going to be a big day, like I shared with the BLS report. I'll keep you guys updated as always, and we'll take it from there. Thanks for jumping on, guys, and I'll catch you guys soon.